What's up, family? This is Jamie. I'm going to try to make this quick. I don't want to take up too much of your time, but I was tape reading today, and basically what that means is I was just watching price action. So I didn't trade, I was just watching to see, how it responded to different levels. And Jerome Powell, um I don't know if he testified, but he spoke today. He was being interviewed or interrogated or something. Sorry, I don't have the full scope of what happened with that, but he I think it just said he spoke, testifies. He testified. Okay. Um, so we had this was a high impact news day, and then we have some high impact news on Friday, non-farm payroll. So right here. So there's going to be a lot of volatility. So usually ahead of non-farm payroll, especially after such an expansive day that we had yesterday, um, a day can consolidate. So anyway, I was looking at, I trade SPX and I also trade E-mini S&P futures. And I oftentimes use the futures chart to trade SPX because obviously futures trades 23 hours a day, where futures only trades during the New York session. So I was just so amazed by the price action today that I guess you can consider this like a journal, but I hope that, maybe it'll help somebody. And also, oftentimes we find ourselves um, jumping in trades and having FOMO, and you'll do yourself a favor if you just some days just don't trade and just watch price action. So and there might be some things on this chart that um you see that I didn't see, but I'm just going based off of what I saw. So 10 people could look at this chart and see 10 different things, I'm sure. So I am studying Inner Circle Trader. He's a 30-year trader, futures, commodities trader, and he teaches people how to trade and read price action. Excuse me, how to read price action for free on YouTube, Inner Circle Trader. So one of the concepts that he has is a new week opening gap. So where you see these little black, two black lines and a red line, this is the gap from Friday close to Sunday open. And I'll link in the description a video that he did today where he talks about the new week opening gap. So I have these on my chart. So that's what these lines are right here. Also, for those of us that study ICT, he talks about order blocks. So this is an order block right here. That's a change in the state of delivery. So, price was coming down, 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 boom, shot up. So this is an order block, okay? On a hourly chart. And you see how price was being held up here for a while before it ran through and came down to this new week opening gap. And then ran up and then came back down. And I just so happen to have this consequent encroachment, which is the middle point of a candle body. Those could be magnets for price. So if we look at, which one was that? Where are we? We're right here. So of this candle right here from last Thursday, it came to the middle of the candle and it bounced. So those are all things that would, when I see a reaction like that, it makes me think that, we have some support here and that we won't necessarily go down any further. So I wanted to point out that I think it was just this week ICT talked about the event horizon, and the event horizon is 50% between an old new week opening gap, and I don't have mine dated, so forgive me. Um, I don't even know which one is what. Maybe I need to label them, but I don't really care. I just need to know that there's a new week opening gap. I don't know why I need to care when it was, but I just need to know that it's there. So between this new week opening gap and this new week opening gap, this is 50%. And I was like, wow, look how price came up here and double topped at the event horizon and fell. So, this was like a lot of chop, because where did New York open? Like right here. New York Open was here, and it was just a lot of chop. And, because we anticipated the chop today, I was like, I'm not even going to trade. I'm just going to watch price action. So the funny thing is that eventually, once the algos kicked in, price ran down, fans found some support here, price ran up, pulled back, and you guys know, who've heard me speak about this before, that I use the Fibonacci. So if you throw the Fibonacci on here, you'll see, and I know it's a lot of lines, but just see if you can bear with me. So we have the Fibonacci from a swing high down to a swing low. We have the 702 level, which is this purple level right here, which is an area of support. We already know that we're in the hourly order block. And I wonder if I measured that, if I would be in consequent encroachment of that order block. I don't know. I didn't measure it. But, once you see price run up like this and then come back swiftly down here, like you can literally, if you're trading futures, have your order sitting there and just let it pick you up and then take it up. Usually we would go up to the next liquidity or imbalance. But what ICT is teaching us is to just go for 5 points or handles. So, I mean, right there, you can get your 5 handles in, what is this, 75 to 80, like, in 10 minutes. So real quick. So one of the reasons why I like to watch futures is it helps me trade the SPX. So let's look at the SPX. I meant to show you guys this white screen so you didn't get freaked out by all those lines on that chart. I know it's a lot. So now, SPX, check this out. So SPX, once we ran up here and we created this swing high right here, I was like, let me put a fib on it to give me an idea of where price is going to retrace to. So this green box right here is marking a fair value gap. So it's between the top of this candle here and the bottom of this candle here. So this green box right here is a fair value gap. These purple boxes are order blocks that are on the hourly chart on SPX. So, what day was this? On Monday, I was like, let me throw the fib on it and see where price is going to retrace to. So ironically enough, price ran down yesterday, and it filled this volume imbalance right here, aka gap. It filled it, and then it had a little created the wick and had a little retracement. And then today we opened up, we came down, and we bounced off the 702 of the fib. We also bounced off this order block right here. We also bounced off the fair value gap. So that coupled with what we saw on ES was like letting me know, like, it's not gonna fall down. So when I'm looking at this, I was like, wow. If you're aggressive, you could easily have seen price pull down here and got a call because of all the reasons why we said there's support here. It's not like, oh my God, it's coming down. ICT teaches us to buy on down closing candles. and sell on up closing candles. So this was coming down. This whole candle was red at one point. So as soon as it got down here, let's look on the 1 minute chart to see if it gives us any indication. Oops, didn't mean to do that. Oops. Let's look on the 1 minute chart to see if it gives us any indication that it's about to turn, because it might be moving so quick. So, we don't see it here. We might see it on a 30-second or 15-second, but you know, if you were really aggressive, you could take that trade. And even if you didn't take it there, if you look at this right here, this is pulling back, I promise you, to a fib level. So even if you didn't feel comfortable taking it there, you could take it here at this fib level. And then if you wanted, like a quick 20 points, there's your 20 points. Maybe you only want 10 points. Maybe you get 2 contracts, 10 points, and just whatever it's going to do is going to do. So that's, where you could get, and how you can gauge like when you can take a trade. And then also if you're looking at what's happening on the futures, we know that price came down and responded and found support off of this new week opening gap. So all of that coupled together is just like information that can support you in deciding if you want to get in a trade or not. So then we saw price come up here. It took out this buy side liquidity. It had a double top. You could easily take that and take a short and have your target be the liquidity down here. And that's exactly what it did. It came down here. But where I was like totally amazed was right here. So price came here. It found support on the order block, the fair value gap. It dipped a little bit below the 702, but like even look right here. This probably came to like the 786. No, 702. So even here, price went up, it pulled back, it came to a fib level, we found our support. It has an order block right here. It has a fair value gap. It's like, take the trade. You could take the trade. So from 72 points up to 82 points, that's 10 points, coming straight up here into this volume imbalance, fair value gap right here, order block. I would say that's an order block. And just take your trade. So in a choppy market like this, you just have to be willing to take profit. And a lot of times I want to hold the trade because I want to be on the whole move, but I'm really trying to train myself to just be comfortable with taking profit. Just take profit. That's the name of the game. Take profit. So while I was sitting watching this, I was like, okay, price came down here. We know it had support. Okay, it ran up. Okay, cool. And we know it's going to retrace down. So as soon as we get this high right here, I'm immediately putting on my my fib because I want to see where is it going to come to. So it comes down and it finds some support on this 702. It took out the liquidity here. And just imagine, having the confluence of, what time is this? 12:26. Having the confluence of what we know is happening over here with the new week opening the gap, with the fib level. It's like even in futures, if you want to put a stage order here to take the trade, like you have so much confluence to tell you that you could do it. So, once I saw this take off over here, I was just like, wow, that's so beautiful. And not once did I have FOMO. I didn't feel bad because what we know is that, tomorrow's another day to trade. So I just thought that was pretty amazing. If you use TradingView and you want to see your chart side by side, and look at ES And did it sync? It's synced. Uh-oh, where am I at? Don't see the symbol. If you want to have like SPX over here, and then you have futures over here, you can watch them look at them at the same time and just, man. So it's like the more you read price action and you actually get to see what's happening, and you see how clear the setups are, like, we just have to have patience, and just know what we're looking for and know that opportunities will present themselves. I was also I just took off the SMAs 9 and 20, but I've observed those. ICT doesn't use those, but I use them just as a to help me out. But look, I mean, SPX, ES, same chart, and I mean, wow. So anyway, I like I said, I just wanted to record this. Hopefully, it provided some insight. Hopefully I'll look back at this a year from now and be like, wow, look how much I've evolved, and look how much more I see on this chart that I didn't see, or I'm just not pointing out, in this conversation. But stay encouraged, remain patient, study the price action, understand what's happening on the charts. It'll all help you be a stronger trader. All right. So with that, I'm going to check out. Let me know in the comments if you found this helpful. And if I see something else again, I'll record a video and share it. Okay. Until next time. Bye.